All right, let's get a global opinion, and a big one at that, right on the top of the program. Kristy Fong is Senior Investment Director at Asian Equities at abrdn, and she's joining us right now to take some questions. Kristy, great to have you with us here on the program. Thanks very much for your time. So just a view on, I mean, you guys are big emerging market investors, Asian emerging market investors, big investor here in India as well. So let me just straight off the bat ask you about what is your view on India, prospects from here out for the next 6 to 12 months?
Hi, good morning. I just wanted to say it's a pleasure to be here ahead of the festive season, Diwali. So happy Diwali to all of you in advance. We've always liked India. India has always been an attractive market for us. We are long-term quality investors, and because of that, there are a lot of companies listed in India that tick many boxes for us. So attractive market, very good long-term prospects. Obviously not without its challenges in the past, but we've seen how companies have been tested through cycles, showing resilience, great management teams. So yeah, very positive on India at the moment.
Okay, very positive on India. Kristy, good morning and greetings of the season to you from our entire team at CNBC-TV18. It's a pleasure to have you on the channel. Although India is in a good place, the global markets don't seem to be, and there are, of course, many more rate hikes coming through as well. Inflation is still not under control in the US. How do you think the setup looks as we head into a new calendar year? Would you be cautious on equities overall, and what should the investment strategy be?
Yeah, I mean, it's not easy times for markets, many asset classes, equities particularly. Like you said, a lot of things to worry about, whether it's rates going up, inflation, tightening stance by monetary policies, and I guess geopolitical risks as well. So obviously the likelihood of recessions or slowdown that's quite clear. So it's not easy. Macro outlook's getting cloudier. But at the same time, you are seeing that reflected in prices and valuations as well. So I guess it depends on one's patience, your investment time horizon, and I suppose picking the right stock ultimately, buying a company that can do better than peers, in such difficult times. Because when things are easy, everyone does well. But I think this is really when a company gets tested.
Hi, Kristy. Morning. Nigel on this side. Kristy, you said that India definitely deserves a higher amount of flows. I mean, you're fairly positive on India. Where does it feature in the pecking order, if you compare us, not with just the emerging markets, we've even been outperforming the mother market. So if you could give us a sense on that. And since you're positive on India, what's the top sector you're bullish on?
Okay. So India has been and continues to be an overweight for us. It's a market that we like, not just compared to other emerging markets, but also developed markets as well within Asia. So it is favored for us. Obviously, it's in a relatively better place given all that's happening elsewhere in the region. So India's amongst our preferred markets. Within that, we've always liked the domestic consumption story. That has not changed. We continue to like the private sector banks. Banks, has been through a difficult cycle, especially in the last 2-3 years. And you are seeing that starting to turn around. So we are constructive on banks, especially the private sector financials. Consumer names is another one that we favor, and that comes in different forms. So, it comes through in not just staples, discretionaries, but, communication services. So that's the underlying driver that we like and we see attractive in India.
And we have some of your top holdings here and sort of on the screen for our viewers. And we'll come to some of these in just a bit. Kristy, I just want to, since you are not just an India investor, but a regional investor as well, right? Asian and emerging markets, etc. I have two questions. One, when you get redemptions, and most global funds are because it's a tough environment, how do you decide where to, because that's been a big debate. Why are FIIs or foreign investors sellers in India? Is it because they're getting redemptions elsewhere? Is it because valuations are too rich? So that is one question. And second, I don't know if you saw this Bank of America fund managers survey. It was about their intentions in the next 12 to 14 months in terms of which market, which emerging market they most like and which they kind of did not like very much. China was top of the list in terms of what they would want to buy, maybe because it's so cheap now. India was actually on the other side. And these are intentions, not their actual positioning. So yeah, both those points, Kristy, go on.
Okay. I guess, markets are funny that way. And we can talk about fundamentals, but it's very much to do with expectations as well. And markets move along with where expectations undershoot or overshoot. And it's also a relative call. So yes, India looks attractive, but if you're managing a regional portfolio, think about the other areas that could give you a bit more alpha, if you can use that term. So I think in terms of, you're right, there's been flows out of equities, and it's always easier to take profits where there's profits to be taken. India does look relatively more expensive, although for us, when we look at it from a longer term horizon, 3 to 5 years, yes, you are seeing slowing growth everywhere. India might be exposed to that slowdown as well, but it is still better growth and better returns compared to other countries. So we will still keep a structural overweight there, but I guess some of these flows could be driven by technical reasons. I'm sorry, I think I might have missed out on your, and China.
Yeah.
So yeah.
The survey, the fund manager survey, but I get
valuations as well. Yeah. So I think at the moment, the struggles or the challenges in China actually makes India look pretty good. I think there's much greater appreciation for what India has to offer in terms of, having a richer or more robust private enterprise. On the regulations front and reform, it's been beneficial, or in the right direction at least. So India has looked like a better place to be. But I suppose markets are fickle as well. And if you start seeing that shift, any sentiment is really bad outside India, especially in a market like China. And if that starts to just shift a bit, I guess you could see a bit more rotation happening.
Kristy, let's talk about individual sectors, right? Because for the longest time, Aberdeen has been very bullish on the IT space, especially some of the large cap IT names. What do you do here? Are you a contra investor? Would you continue to stay bullish despite the 20-30% fall that large cap IT companies have seen?
Yes, IT companies, we continue to like. We continue to like the ones that we hold, but we're also very mindful of how much in the last couple of years. So I think taking profits is always the right thing to do, or at least it's a healthy way. We do expect volatility in markets, and there's always, that could be prone to pullbacks. So we have, while we maintain a liking for IT services, we have been reducing the exposure by taking some profits. But again, it's an area that we feel is in the right place. Demand is still strong. Obviously, the strength of the demand depends on the outlook of the global economy. So again, not discounting the fact that it could be a bit of slowdown, labor tightening, margin pressure, that's also happening as well. So if you're asking about whether we're taking a contrarian view, we're taking a longer term view, and will remain constructive on the names that we believe will do better than their competitors.
Okay, so that's on the tech space. Interesting. There's also a consolidation wave in sectors like cement. Is there any structural re-rating on the cards here? And is Aberdeen playing the cement sector in any way?
Yes, we've always liked cement for the fact that we consider it a proxy to housing construction and increasingly in infrastructure investment as well. The industry has been, there are many competitors, but they're quite clear leaders within the industry. So take someone for Ultratech Cement, for example, that has really proven its worth, its scale, its cost efficiency, and how it continues to deliver on good returns over cycles, having the balance sheet to consolidate and make acquisitions. We do like the fact that they also think about ESG issues and thinking about reducing their carbon footprint. Yes, I think there is consolidation, yet at the same time, you're seeing some big competitors coming in as well. So that's also something to watch. I guess the capacity in Indian cement is expected to, well, the supply demand situation. I think that is really what's key. So yes, supply could increase, but I think with the demand backdrop being quite healthy as well, that should still make the outlook for cement quite a healthy one.